the live stream. So, as always, my name's Duraj. We have these live streams because we know crypto taxes can be stressful, they can be confusing, and we got the tax extension deadline coming up. We know some of you are probably, still looking to file. So, with me today, I've got two of our tax experts from CoinLedger. First off, we got Jordan Base. He runs his own crypto accounting firm, taxing cryptocurrency, and he's just incredibly qualified and knowledgeable. He's got a JD, CPA, and LLM. How's it going, Jordan?
Doing all right. Hopefully, people that are waiting to the last minute and watching the stream can get some good tax advice on how to file and finalize their crypto taxes. Because I know I'm dealing with a lot of people that need that help. So hopefully, this will be some good guidance, and Miles can provide some good guidance as well on the CoinLedger software side.
Yeah, absolutely. And for those who don't know, Miles has years of experience preparing tax returns for some high net worth individuals as well. And of course, that includes a lot of cryptocurrency experience. How's it going, Miles?
It's good. It's good. Looking forward to this live stream.
Awesome. So we're going to start things off with a quick little discussion about the tax extension deadline. But just remember, guys, if you have any questions, feel free to type it in to the YouTube live stream messages. We'll try to get through as many questions as we can. Um, so let's just start with first things first. The tax extension deadline is in a few days. Do you have any recommendations or advice for people who haven't filed yet? What steps should they be taking? Anything like that? We'll start with Jordan.
Yeah, well, a lot of people haven't filed yet, so they shouldn't panic. That's the first thing. But usually, if you haven't filed yet, right, it's because maybe you're waiting for a final piece of information or you're waiting to finalize your crypto tax reconciliation on CoinLedger. And so, what I would say for people is definitely make sure that you take this seriously. You don't want to be late. The late filing penalties get really, really annoying. And if you owe tax, it can be a lot more than what you originally expected. But the key to all of this when it comes to crypto taxes is leveraging tools like CoinLedger, getting the data in there. If you think it's right, great. If you think it's wrong, then try to fix it. But at the very least, the worst case scenario, file and maybe amend after the fact if you really can't figure out what's going on, what the material discrepancies may be with the software solution. I doubt that would happen with CoinLedger. All the integrations that are up now, you should be able to populate these reconciliation reports. But the biggest key is just making sure that it's done in a timely manner. It's actually not on October 15th this year, right? So that's key to know. October 17th is the filing deadline because the 15th falls on a weekend. So that does give people a couple of extra days. But the reality is, if you're not done with your return by now, you should be very, very close, or else you may be in a little bit of trouble.
Got it. That is an important distinction to make. Thanks, Jordan. And Miles, anything you want to add on to what Jordan just said?
Yeah, I agree with Jordan. We're cutting it close. If you're not done yet, it's due next week on Monday. And so, like Jordan said, you're either waiting for something that's out of your control or you are procrastinating. And now's the time. Don't wait until that last day. Don't wait. It can be difficult. And so you're going, 2021, this is what we're filing if you're on extension. And 2021 was so long ago. It was 10 months ago. And so if you haven't spent the time to go through all of your wallets, all of the blockchains that you've used in 2021, you have to start now because it can take time and it's your responsibility to make sure all of your information gets imported into CoinLedger. An important thing to note, it's like this stuff is taxable. It's reportable. It should be reported. And if you have questions like, hey, I lost money. Do I really have to report? Or I had like $8 of staking income. Do I really want to report that? The answer is yes. First of all, losses will help you on your tax return. So in the tax world, losses are actually good, and they'll help you save money on your return. So report your losses. Additionally, if you have like small, what may be somewhat immaterial, some items, report those. If you have $8 of income, pay the tax on $8, you're going to be way better off by filing your return totally correct. You're showing the IRS you're doing your due diligence to understand the tax laws, report them correctly. And so it can only help you by fully reporting correctly and, by filing on time by 10/17, just like Jordan mentioned.
Sweet. No, that was super comprehensive. Thanks for that, Miles. Um, so I do want to get into some of these questions that we're getting from YouTube. So here's one from Mona. I guess Mona was holding cryptocurrency on Celsius, and they're going through their whole Chapter 11 situation. So obviously that's a long and drawn out process. There may be more questions than we have answers at this moment, but do you have any guidance for someone who might be in a situation like that? We'll start with Jordan again.
Yeah. The reality in that situation is it's extremely unfortunate, right? People maybe sold their assets toward the end of the year and they wanted to get some additional yield and they placed their assets in Celsius to try to generate that yield, or they were custodying funds in Celsius all throughout 2021 and making transactions and trades. But what would have happened throughout the course of the year is there were taxable events that occurred. There was income that was generated with the staking, with the yield, with the interest payments that Celsius was paying out, or other exchanges that you were using. And if you have a significant amount of funds locked up in Celsius, unfortunately, that's not going to get rid of the fact that you had all of this other income throughout the year, all of these other transactions throughout the year. Is it possible that if there is a large tax liability, that maybe there will be some leniency with the IRS in terms of paying that off over a period of time, or waiting to see until what happens with Celsius and not necessarily not making a payment at all, but having some extended long-term installment plan if there is one of those situations where someone had a lot of income, but their funds are literally stuck on Celsius and it's easily proven? Yes, I do think that will be something that can happen. But unfortunately, the reality of the situation is there was income that was generated all throughout 2021. In theory, those funds that were on Celsius as of Jan 1, 2022, they all could have been withdrawn and they could have been used to facilitate some sort of tax payment, right? So there will be a tax liability associated. There are some other things going on in the bankruptcy proceedings. People may be looking into selling their claims to the bankruptcy proceeding. People may be waiting to see if they'll get their funds back. There's a lot of moving parts. We could have a 45-minute discussion just on that alone. But the key is, don't use that as an excuse to not report all of the other crypto activity or even the crypto activity within Celsius, because most likely you may have received a 1099 MISC from Celsius. You might have received some other forms from them as well. And so you don't want to get stuck in that situation where this unfortunate thing that happened causes you to then not file your taxes properly. And then it creates even more issues down the line than you already have with all of those funds being stuck in that exchange, in that wallet.
Yeah, well said. I mean, it's important to remember those 1099 forms, like a copy goes to the customer and the copy goes to the IRS as well. So they'll be aware of that tax liability. Miles, anything you want to add on to that?
No, I think Jordan laid it out. It's important to note we're still kind of in our head. We're still talking about 2021 taxes. So Jordan is exactly right. Any activity that occurred in Celsius that is reportable from the 2021 tax year needs to be on the tax return for 2021. Now, this Celsius bankruptcy event happened in 2022. So if you're thinking ahead to, okay, how do I report my losses from my 2022 activity and not having access to those funds through the bankruptcy, et cetera, unfortunately, we don't really have a good answer as to the taxability for 2022 yet. And that's because we're still waiting for the bankruptcy proceedings to fully take place, because many users may be getting some return from Celsius. And so kind of the big picture is, if let's say you don't get anything back from Celsius, it's just a total loss. You get nothing. All the money that happens from the bankruptcy goes to the banks, not to the users. You're going to very likely, now you should probably consult your tax advisor, you're very likely going to be able to write off the investment. You had an investment in these cryptocurrencies, and at a certain point, they're now worth nothing. You have none of those cryptocurrencies from this bankruptcy proceeding. And so you may be able to write that off. Now, if you get some return back, it's a different story. Are you getting a return back in cryptocurrency? Are you getting a return back in US dollars? We will know more about this situation and the exact results of everything going on in 2022 a little later down the line, when we have more information. Luckily, you don't have to worry about that for now. You won't have to file those taxes until April 15th, and so we're in the clear for now. But we'll have to stay tuned to see what happens, for all those people that are unfortunately, worse off from the Celsius debacle.
Got it. Got it. Well said. And yeah, just a bad situation all around. So here's a question from Winter Storm on YouTube. So he asked, using blockchain, his question's about using blockchains where tokens have to be sent back with any assets. So the example he uses, if he sends 10 tokens to a service, then he gets 2 tokens back with some other assets. Would that be a taxable event? So speaking generally here, uh, it's important that to note that we're responding to this example specifically, and answers may vary depending on the specific mechanisms of the DeFi protocols that you're using. But Miles, you want to take a stab at this?
Yeah, very generally, anytime you're transferring away your crypto assets and receiving different crypto assets back in return, this type of exchange is taxable. So you're going to want to report, your trade, if you are giving up assets and you're getting new assets back. This is a disposal of your original assets, and you'll have gain or loss depending on how the price of those tokens have changed since you originally acquired them.
Gotcha. Well said. Jordan, anything you want to add?
No, I mean, I would say that specific question is not, to me, like extremely clear on what, like you said, Daraj, what the mechanism of that transaction is and how that looks on chain. But pretty much what Miles said, I mean, if there's some sort of transaction where there's an execution of a quote unquote trade, like you're sending something and receiving something in return, most likely that would be some sort of taxable event. However, it's hard to tell without seeing the specific transaction. I would say conservative approach on all of these sort of things. If I'm sending somebody something and I'm receiving something else, and it's not, it's not for the purpose of a transaction like a trade, maybe there's a different classification that can be made either internally in like a reconciliation report like CoinLedger, or externally, maybe like overriding, right, what the transaction, what the purpose was outside of the software. But at the end of the day, most of these transactions, if there's any sort of movement of funds where you send something and you receive something else from, whether it's a smart contract driven, centralized exchange driven, or peer to peer, that's likely going to be some sort of taxable event.
Right. Well said. Well said. So we're getting a lot of questions. Love to see this, guys. So here's one from Anthony. He's been having some issues tracking down some missing transaction data. So I guess his question is Jordan an independent consultant I can hire? So I guess here it would be just good to talk about situations where you might want to consider getting started with a crypto accountant, and Jordan can take that on. Miles, once Jordan's done, maybe you can talk a little bit about our expert review service.
Yeah, I mean, I would highlight that expert review service for sure, because it's something that's really, really great for CoinLedger users to get somebody to go in and look at the data, someone on the team, right? And Miles will touch on this, that can really see maybe what's going on. Ultimately, you may need to elevate something to a professional, whether that's someone like myself, a lawyer or a CPA, or another firm that provides these services like forensic accounting or on-chain transaction accounting, because that's typically where the issues arise. What I would say is, whether it's someone like me or my firm or an additional person in the space that's competent, that's crypto native, usually there is something that can be done outside of software when there are these issues. But the thing is that in order to get to that point, you really do have to leverage some sort of software solution like CoinLedger, or else you're going to be scrambling for the information. It's not something that's so simple to reconcile without aggregating the data, scraping the data, maybe using CoinLedger, having an expert look at it and review it. And then maybe if you need something additional to that, taking that to somebody like myself. What we would do in that situation is obviously probably similar to something that CoinLedger can do or what the expert team can do. But because we are licensed professionals and we're not just trying to do the software solution, maybe there's some approaches that we can take, some positions that we can take that we feel comfortable with, because we would maybe be signing off on a return or issuing some sort of opinion. That's not something fully automated like a software solution. So the answer to your question, Anthony, is yes, there are people like myself and me included in this space that can provide that service, but there are steps that I would take before you just the reality is I would take some steps before you get to that level. CoinLedger first, expert review possibly second, which Miles will touch on, and then elevating. And unless you know right away, I don't want to do any of this, then sure, come over to us and we'll be able to help you out at my firm.
Wow, if only other business owners were as honest as Jordan and the accounting cryptocurrency team. Yeah, Miles, anything else you want to add about the expert review service or anything?
Yeah, yeah. Many people do experience difficulties getting all their data in, and CoinLedger now has this expert review service, which the whole purpose is rather than maybe provide tax advice or guidance. Filing the return is not what we're going to do with the expert review service. But what we are able to do is help you get all of your data in and help you get the data in correctly. So if that is the experience, if that's your experience, you're having a little bit of difficulty making sure all of your data is in, CoinLedger now has an expert review service, which we can kind of work with you one-on-one, help you get all your data in, and then provide you with a summary of all of your data so you can go out and file, or you can provide this information to your tax accountant, which can, at the end of the day, save you a lot of money. If you are working through the expert review service and you get all the data in correctly, then your accountant can take that information and file for you. You're going to get charged much less on the accounting bill, if all of your data and information is ready to go for the accountant.
Awesome. And you can purchase that expert review service on our site. It does cost a few $100s more than just a typical tax report, but we will have someone on our team look through your transactions and just highlight areas where, hey, here's where your cost basis is missing. Here's another issue we found, and depending on your situation, that can be extremely helpful for saving time and money down the line. So looking through these questions, I do see another question about missing cost basis here. A lot of the times that is the reason behind seeing capital gains that are too high. Maybe there's just one transaction that's really screwing things up. Again, the expert review service can be really helpful here. So here's a question about crypto credit cards, something that's becoming more popular as of late. So could you discuss for 2021 whether individual crypto credit card purchases and rewards are taxable events? Miles, you want to start us off on this one?
Yeah, crypto credit cards are becoming more popular, and they're a great way to, kind of be all in on crypto. Rather than spending with a credit card coming from your bank, spend coming from your crypto, which is a great way to be all in. Purchasing goods or services with your credit card is a taxable event if you're spending your crypto. Crypto is an asset, capital asset, and when you dispose of that through purchasing a coffee or by paying your tax accountant through crypto, you're disposing of that crypto, and you have gain or loss depending on how the price of your crypto has changed over time. So that's kind of one piece of this puzzle. In that case, you may have a ton of transactions in which you will want to use a service like CoinLedger to aggregate all that information for you in an easy, simple way. The other side of the benefit of using these crypto cards are the reward side of things, cash back, discounts, etc. The way credit card cash back is handled from a taxable perspective is that cash back or other rewards from credit cards are not taxed. It's viewed as a discount. So let's say you get 5% cash back. It's viewed as a discount. So if you get 5% cash back, you're really only spending 95% of the full value in order to purchase whatever good you're buying. And so luckily, it's a great way to earn crypto without having to pay the tax on that. Now, when you go and dispose of that crypto that you've earned, because you haven't paid tax on it, you actually have $0 of basis in that cryptocurrency. So when you eventually spend or trade your crypto away that you've earned through your credit card rewards, you will pay tax on the capital gain portion when you eventually dispose. But that may never occur, or may be years down the line.
Well said. Well said. We're getting a lot of questions, so we'll just keep moving right along. So here's another question from Lance. Could you walk us through the tax consequences of yield payments? So I'm assuming this is just about earning crypto income in general. Jordan, you want to take this?
Sure. So depending on the type of yield, obviously it will look different from a transaction structure perspective, but all in all, it's the same thing from a tax perspective. Yield, whether it's on-chain staking rewards, LP yield from providing liquidity on a DEX, yield like interest on something we talked about earlier, like Celsius or Nexo or BlockFi or something like that, it's income. It's income when you receive it. Now, there's a lot of stuff that's been said about staking rewards, and there's some discussion about whether or not that should be taxed upon receipt. Is it self-created property that no one in the history of the United States tax code has usually paid tax on until it was disposed? That's a whole nother issue, right? But for yield, what's really happening is that you're getting what we call in the tax world a net accession of wealth. You're increasing your purchase power. You're increasing the amount of money that you have at your disposal for doing what? Maybe providing your assets to earn money on top of, like you would getting interest from a bank or from a loan that you have outstanding, and you're generating that interest income. That's effectively what it is. So the right way to look at it is, if I have this money coming in, whether it's in crypto, whether it's in stable coins, whether it's in cash, there is that what I call a net accession of wealth. There is income that has to be recognized on that yield. The structure, again, of that yield that you're generating, maybe there's some differences of opinion on certain types of yield, specifically staking rewards and maybe even rebase tokens, right? That was very popular in 2021, not so much in 2022. But high level, not even like conservative approach, what it actually is when you're generating yield, you are generating taxable income. It's other income, likely other portfolio income, which would also possibly be subject to that net investment income tax that some of you might have become very, very familiar with as of 2021, when you had all these large crypto gains in 2021. But that's basically it from a yield perspective. You have to think about it as it's almost like treated as interest income. It's not the same sort of, thing. It could be if you're on Celsius or BlockFi, like I said, but it's income once you receive that asset. If there's a lockup, Miles can talk about this because this is a really fun topic. I know he loves this. If there's a lockup, if you can't reach into that yield, if there's something where you don't actually have dominion and control of that asset as the yield is occurring, sure, maybe that's not taxable until you could actually reach into that and feel that and appreciate that accession of wealth, right? But most of the time when we're talking yield, we're talking income upon receipt.
Well said. Well said. Miles, real quick, anything you want to add, or else we could go to the next question?
Yeah, really quick. Most of the time you're earning this yield, it's interest. However, depending on the DeFi protocol you use and the way you're, earning, it could show up in a different way. For example, using Uniswap and being a liquidity provider through Uniswap's platform, if you're combining two tokens together into a pool token, a liquidity pool token, you're actually automatically earning a portion of what the pool is earning it accrues into the value of your pool tokens. And so in this case, you have kind of a capital gain or a loss when you trade your tokens into your pool token. But while the pool token is earning, you don't have income until you trade back to your original tokens. And so in this case, the income, this ascension of wealth that you're experiencing, shows up when you trade back to your original 2 tokens. So there could be income like an interest income, but there also could be income in terms of capital gains. It all depends on how the DeFi protocol is set up.
Yeah, that's where things get complicated. It really depends on the specific mechanisms of the protocol. So here's a question from Kevin, and this is a good one. This is a question we see a lot. So Kevin asks, I made money off a token in 2021. I did convert that to USDC, but I left it in my MetaMask account. I have not converted it to fiat. When and how do I report this for tax purposes? Jordan, you want to take this one on?
Yeah. So this is a very, very good question. Although it's like a very simple, straightforward question, it's probably the best place to start when talking about crypto taxes, in my opinion, because I get this question all the time. I bought something, I swapped it to stables, I swapped it back to Ethereum, I swapped it back to something, but I never took the money out of my account. I never even sent the funds from my MetaMask wallet to my Coinbase wallet and sent it back to my bank. Not only that, it's literally just stuck there. It's in a non-KYC'd, unhosted wallet. And how do I report it, and do I have to report it? The answer on the do I have to report it is yes. Obviously, it's a taxable event that you've incurred where you sold something for something else. You triggered a gain. It's capital. It might be long-term. It might be short-term, depending on your holding pattern. That will help you from a tax perspective if you held that asset for a longer period of time. But the real question is, how do I report this if I never took the money back into my account? I know how much US dollar value I put into my portfolio. I know what the US dollar value is when I take it out and send it back to my Wells Fargo account, but I never did that. This is exactly where CoinLedger comes in to help, because you can populate reports. Let's say you fiat onboarded with Coinbase. You load up your Coinbase API or your raw data inside of the CoinLedger platform. And now you're like, oh, well, I use this external wallet address in MetaMask. You plug that into CoinLedger. It'll scrape all of the information from those transactions, including that one token that you sold for USDC. You can go to the tax report page and populate a report, and then you're ready to go. If you file yourself, you can upload that into something like TurboTax. If you have a CPA or an accountant or some tax professional that files for you, you can export that report and hand it off to them. And the reason why I'm telling you this, even though that hurts my firm, right? You're not coming to our firm, is because it really is that simple sometimes. We want to help people that have these sophisticated tax issues, whether it's simple for us, but sophisticated to them, no matter what. So if you need help and you want to get it done by a professional, that's fine. But there are software solutions, CoinLedger in specific, which is building a lot of integrations out over the course of the last 4 months for people like this with these on-chain transactions that can do this in an expedited way more cost effective for sure, and also get it ready so that it's on your time. You're not emailing or calling or communicating with a professional firm that might have hundreds of clients when you just need your situation taken care of. So that's the truth. I know Daraj mentioned I'm being honest, but I am being honest. It's really the truth. So that's how you would report it. Plug your stuff into CoinLedger, let it populate for you, see if it makes sense, which it should. That sounds like a very simple sort of transaction for CoinLedger to digest, and then throw it on your tax return. You don't have to cash out for it to be taxable.
Yeah, well said. And we did get a couple of questions about Jordan's firm name. I do want to make this clear because I think that I messed this up earlier. It's taxing cryptocurrency.
That's correct.
So try out CoinLedger, try out our expert review service, and if your transactions are especially complex, you can reach out to someone like Jordan for help. So let's see. I think we have time for a couple more questions. Let's see what we got. So someone asked about wash sales in 2021. So what are the wash sale rules for cryptocurrency in 2021? And does the CoinLedger software take that into account? Two-part question here. Miles, you want to start us off on this one?
Yeah. Yeah, the wash sale rule is something that comes up. It is applicable to securities. So, according to how the U.S. tax law is structured, they say securities applicable to wash sale rule. Now, cryptocurrency is not considered a security. And so the general consensus among tax professionals is that cryptocurrency does not have the rules, does not have to apply to the wash sale rules. And so what that means is, when you sell a token, you can buy back that token sometime after and still claim the loss. If you sell your token for a loss, you can buy in sometime after. It's important to note that there are still rules in place that prevent you from executing a transaction solely for the tax benefit. So if you sell, claim, and you want to claim your loss, but immediately trade back and get your coins back within the same minute, you just click sell and then rebuy. This is going to be looked at by the IRS as kind of the only reason you did this was to save money on taxes. And so it's important to note, although the wash sale rule does not apply to crypto as of now, that may change with new legislation for future tax years. It there are still some rules in place that are preventing you from immediately buying back. And so you may want to wait a day or two. It depends on the volatility of the coin, et cetera. It isn't really a black and white issue. And so you just want to be careful and cognizant of the fact that, hey, buying back immediately after may not be the best decision.
Yeah, and I just want to give some context to anyone who may not know what the wash sale rule is. So right now, if you sell a stock at a loss, you can't claim a capital loss on your tax return if you bought the same stock 30 days or before or after the sale. Right now, that same rule doesn't apply to cryptocurrency. Jordan, anything you want to add on wash sales really quick?
No, I would say though, I've seen a lot of issues with wash sale, not on the crypto side, obviously, but with securities for 2021. A lot of people at home trading stocks, not really aware of that rule. So it's a great question to ask how it pertains to crypto, because I know for a fact there's probably people in this live stream that have seen that wash sale rule adjustment on their 1099B from Robinhood for 2021, and they weren't aware of it. They thought they had like a $15,000 loss or something, but it shows as like a $6,000 gain, and they weren't prepared for the tax. Or multiply that by 10 or whatever, you could see how it becomes a large tax liability unexpected, right? What Miles is saying on the wash sale rule is 100% right. The thing is, and what he also mentioned is that volatility would impact that. In theory, if you buy something back 2 hours later, that might look like you're abusing the transaction. And that's the economic substance doctrine, which is, you can't, like Miles said, you can't just execute a transaction for the purpose of lowering a tax liability, even though people sometimes engage in that activity all the time. But with the volatility of crypto, like Miles said, something drops 30, if you sell it and it drops 25%, like there's a flash crash, and you buy back that same day, I think you would have a very sound argument to say, no, I sold this. It came back down 25%, which was where it was 4 months ago. So I immediately executed the transaction. I just reallocated my basis and my holding pattern. But if you do what Miles said in his example of you buy it or you sell it and then 5 minutes later you buy it and there's like not even a percentage slippage, you're just executing the loss, maybe that, if it gets looked into, maybe it's disallowed, right? So it is important to note these things are being looked at. There was almost a change with wash sale rules in digital assets. I would anticipate that comes back after the midterm elections. They start discussing that again. So maybe take advantage of that in 2022 if you haven't sold your discounted tokens at a loss already.
Awesome. Well said. I think we are over on time here, so we can wrap things up. You guys have any closing notes for anyone out there who's looking to submit their tax return before the deadline?
Yeah, just the deadline is here. If you're on extension, get your data into CoinLedger and file. So the clock is ticking.
He's not wrong. I would say the same thing. And I would say, just because I've seen not as part of, let's say, internally what CoinLedger is doing on the expert review side, but I know what is being done. If people really do need assistance, but they're not, well, first of all, most firms like ours, we don't have capacity to take on new clients with 7 days left or 6 days left in the deadline. But if you do need that assistance and you're stressing out and you're thinking that this is going to be too much for you to accomplish by yourself, I would, in my expert opinion, I would advise somebody to reach out to somebody on the CoinLedger team, see if that expert review makes sense for you, because a lot of hand holding could take place. It can get finished. It can ease and alleviate any anxiety or concerns, because I know this is stressful. Trust me, I deal with people all the time with this specific issue. So that would be my last piece of advice. My second piece of advice, actually, so that's my second to last. My actual last piece of advice is for next year, get started on 2022 reconciliations in November and December of 2022. Do not wait for 2023. Even if you start in February or March, you'll be like, oh, I'll file an extension. And then over the summer, you're not going to do it. And then September comes around, maybe you'll start doing it. October, you're going to start stressing out about it again. So I would say make sure you get started on this early, whether that's with CoinLedger or a firm. It's vital. It's extremely important. And so have a good rest of your week, I'd say, and get your taxes filed, and hopefully you don't owe too much money.
Hopefully not. And yeah, just to summarize what Jordan was talking about earlier. So remember, CoinLedger can really help when it comes to aggregating your transactions, especially if you're using multiple wallets and exchanges. It's so hard to keep track of that just through a spreadsheet on your own. If you're having any issues, our expert review team is ready and available to help. So the link is in the chat. We did drop that in if you're interested in that service. With especially complex transactions, you can reach out to a tax professional like Jordan and the team at Tax and Cryptocurrency, but it is a little bit late in the game if you're looking for some help with the October deadline. But, they're always available if you're looking for something further down the line. Well, would you say that's all accurate, Jordan?
Yeah, I would say it would be tough to get stuff done for 21. Unfortunately, I wish I could help everyone, and I wish that we could all help everyone. But for 2022, there's definitely plenty of time, right? We can start planning and structuring and looking at the transactions and maybe harvesting some losses if possible. But yeah, Duraj, that sounds about right. So expert review is probably the way to go at this point in the game.
Yeah. And again, the link is in the chat. And if you're just looking to get started with the free CoinLedger account, you can check the link in the description. Well, I think that's all for today. So thanks, Jordan and Miles, and thanks for tuning in. Everyone have a great week now.